February 2026, Washington, D.C. Inside the building of the United States Department of the Treasury, a numerical figure has risen above $36 trillion. No announcement was made, no alarm sounded, just silence. But this silence is the most expensive silence in the world. Every hour, approximately $230 million of new debt is added to America. Every minute, every second. It does not stop. This is not just a number, it is a time bomb. First, understand where all of this began. 1971, U.S. President Nixon appeared on television one night and told the world that the dollar's relationship with gold was over. Before that, 1 ounce of gold could be obtained in exchange for every $35. It was a guarantee. It was trust. When that trust broke, the U.S. government began printing money, without restraint, without limit. In 1971, America's total debt was $400 billion. Today it is $36 trillion. That is a 90-fold increase in just 54 years. But the real damage is not that the debt increased. The real damage is that the purchasing power of the dollar was destroyed. What could be bought for $1 in 1971 now requires nearly $7. Experts estimate that the real loss in the dollar's value equals roughly $20 to $30 trillion. This is a silent default. This is a form of looting that happens without any gun. Now we come to the real players: China, Russia, India, Turkey. Over the past 5 years, these countries have been quietly buying gold, continuously in large quantities. Why? In 2022, when Russia invaded Ukraine, the United States used a weapon that had never been used before. Russia's $300 billion in US dollar reserves were frozen. One decision, and such a massive amount of money disappeared. After seeing this, every finance minister in the world asked one question: what if this happened to us? The answer to that question is gold. Gold cannot be frozen by anyone. Gold does not disappear by anyone's order. That is why central banks are buying gold. From 2022 to 2024, central banks purchased record amounts of gold, nearly 1,000 tons annually. Venezuela attempted to bypass the dollar. It failed because it lacked power. But China has power. China is slowly linking gold with the yuan. It wants to weaken the dollar. And America's debt is helping China achieve this. Now we come to silver, and this is where things become interesting. Throughout history, gold and silver have always had a special relationship known as the Dow-gold ratio. Whenever economic pressure increases, gold rises. And when gold rises, silver usually rises even faster. Today, the gold to silver ratio stands roughly between 81 and 91. That means it takes 80 to 90 ounces of silver to buy 1 ounce of gold. The historical average has been between 41 and 61. This means silver is still cheap compared to gold. If gold reaches $10,000 to $15,000, which many major experts estimate, silver could move between $200 and $400. This is not only because of safe haven investment demand, but also because silver's industrial use is increasing. Solar panels, electric vehicles, electronics, all require silver. Demand is rising while supply is limited. Now let us discuss 4 possible paths and also explain the probability of upward and downward movement in each scenario. First path, a debt ceiling crisis. The U.S. Congress refuses or delays raising the debt ceiling. In such a situation, the dollar weakens and gold and silver move higher. Analysts estimate that in this case, the probability of silver moving upward is approximately 65 to 75%. The probability of moving downward is 10 to 15% because in the beginning, panic causes people to sell everything. Second path, the Federal Reserve fails to reduce interest rates, meaning inflation rises again and the Fed cannot cut rates. In this situation, the economy weakens and pressure increases on the dollar. The probability of silver moving upward is 55 to 65%. However, the probability of decline is also 20 to 25% because industrial demand could decrease. Third path, China brings a large amount of gold into the market, meaning China reveals its gold reserves and links the yuan to gold. In this case, after initial panic, both gold and silver could rise very rapidly. This is the biggest potential scenario, but also the least certain. Probability, 40 to 50% within the next 3 years. Fourth path, gradual upward movement. No major crisis occurs, but the dollar slowly weakens, inflation persists, and gold and silver rise gradually. This is the most likely path. There is a 70 to 80% probability that within the next 36 months, silver rises at least 40 to 60% from its current price. But remember, the market can do anything. This is analysis, not certainty. Even the world's largest banks and hedge funds are proven wrong in their predictions. No one knows with 100% certainty what will happen tomorrow. Anyone who convinces you that they know for sure is deceiving you. Now think, 36 trillion in debt, an annual increase of 2 trillion, China quietly buying gold, central banks moving away from the dollar, industrial demand for silver increasing. These numbers are not going anywhere. They will continue to grow. The only question is, when this time bomb explodes, where will you be standing? History remembers those who prepared before the storm. Note, this video is for educational and informational purposes only. Before making any investment decision, be sure to consult your financial advisor.